Hello traders, the title of the video is Stochastic Trader explain volume spike trading method. Alright, we're on a monthly chart looking at the Procter and Gamble Corporation Incorporated Epic PG Papa Golf, and we want to talk about Stochastic Trader explain volume spike trading method. Alright, on a monthly chart, we can see what I want trader to look for, or what are we looking for. We want to see first the volume spike, okay, especially on a monthly chart, okay. We are swing trading, so we have average volume, and now we see a volume spike. This is the first volume spike right here. The volume spike is only indicating to us that we have an increase in the trading activity. But we cannot tell straight away whether those are buyers or sellers. But we want to see an increase in trading activity, which is the volume spike. The next thing that we want to look for, now that the volume spike is fired, alright, we wait for the stochastic to reach the oversold zone. Look carefully here. You can see that the volume spike was happening here at the point where the stochastic was somewhere up near the overbought zone. Alright, but now we wait for the stochastic to become oversold. So when we see the volume spike and then the stochastic later on becomes oversold, we will implement a top-down trade method to buy the financial instrument. Alright, but that's not the best way to trade the volume bar. But here I'm talking about a specific trading method that consists of looking for a surge in trading activity, then the stochastic 833 is oversold. But we can trade the surge in trading volume in a different way, which I talk about in another video at the Pro Traders and also at the 24 Stock Trader YouTube channels. One more time, we have again a surge in trading volume here. That one is a surge in trading volume, above average increase in trading volume. At that point in time, the stochastic was somewhere here at the level of 50. When we see that surge in trading volume, now the stochastic has reached the oversold zone. We'll implement a top-down trading method to buy the financial instrument. Top-down trading method consists of using different time frames. Doesn't mean we just buy. But if there is a valid signal, we will buy. And if we buy and the signal fails, we'll come out. Stochastic was oversold here. Here. Between the two lines. But anytime the stochastic oversold, you want to make sure that the price is at a support level. If the stochastic is oversold, but the price is at a resistance level, you need to be very, very careful. Because when the stochastic oversold, it's pointing to a support level. But if the price is already at a resistance level, ignore that oversold stochastic. Here again, we have an increase in trading activity. The volume spike is in place. Now the stochastic is oversold. For us, stochastic oversold indicates that the price is at a support level. If the price happens to be at a resistance level, we'll ignore that oversold stochastic. Or if the stochastic oversold and the price already went up to a resistance level, we ignore that oversold stochastic. We want the price to be at a support level. See here, so it went up, price went up here. You see, find a bit of resistance here. That's a resistance level. Here it breaks above, it takes that same line. Now we have a surge in trading volume and the stochastic is oversold and the price is also at a key level. Other traders may combine oversold stochastic with candlestick pattern and then implement a top-down trading method to take it to the next resistance level. But on the other hand, so those are bullish one here. So on the other hand, if the stochastic, if we see an increase in trading activity. A surge in trading volume has occurred at a time when the stochastic is not yet oversold, it's neither oversold neither overbought. So you can see at that point the stochastic was somewhere near the level of 67 when we have that surge in trading volume. On the other hand, so if we have a surge in trading activity or volume spike, and the stochastic later on becomes overbought, we will give priority to bearish signal using a top-down trading method. That's the case here, surge in trading volume. Then the stochastic is now overbought, it reaches the overbought zone, was around 67 at the surge of the trading volume, at the volume spike. Now it pop up above 75. Now we have, okay, a bearish trading setup. Well, it's very simple, isn't it? It's very simple. Very simple, okay? Very simple, but we need to practice more. So the stochastic became overbought at this point in time after when I'm placing my red vertical line. So it became overbought for the first time after the surge in trade volume right there. If the stochastic is overbought but the price is at a support level, we will ignore that overbought stochastic. Stochastic overbought is pointing to us a resistance level. Which one here? Is this trend line here, this trend line. For Procter and Gamble stock, the resistance that the stochastic pointing to us is the pink line here, connecting this high here and this one here on the monthly chart. We draw that okay, pink trend line. So stochastic was overbought here, his zone, pointing to add that again here is pointing to add that we are approaching. See here, it's pointing to add that pink trend line. So we again here, as he was overbought, it's pointing to add that resistance level. So increase in trading activity, all right, stochastic become overbought for the first time, very, very important, for the first time. So he was oversold before, here he became overbought for the first time after a surge in trading volume, after a volume spike, and the price is also at a resistance zone. If it was not, we ignore it. Now we must implement a different time frame trading method to trade it. If the signal fail, will come on. I need to say this again because I said it before, but it's so important, so that's why I need to repeat it 100 times. There are many other ways that we use the volume bar. But what we are talking about today is a specific stochastic and volume bar trading method that consists of using, okay, looking first for a surge in trading volume, and then the stochastic later on will become oversold and overbought. If it's oversold, we want the price to be at a support level. If it's overbought, we want the price to be at a resistance level. And then we implement a different time frame trading method. Do not take the video as okay, just a trading volume trading technique. As I told you before, we recorded other videos about trading volume, volume spike. I've been talking about it for years now. But today, I want to highlight one specific trading method that combines the stochastic and the volume spike. All right. So here it is. Again, if you look here, the stochastic was overbought, was pointing to us. If you connect the top of that, the high of this candlestick bar, and this one here, and this one, and this one, we have that blue trend line. You can see was exhibiting here a bearish. You can see here a bearish divergence as the price was retesting that blue trend line. We have also here, again you can see a surge in trading volume, okay, bearish divergence. Look what's happening here, boom, down. All right. Okay, so but those are early traders that catch it. All right, so those are you remember we were talking about this at the beginning because the price now came down to a support level and the stochastic was oversold. But those who were selling here were using the bearish divergence and a surge in trading volume. So that's why I've said to you, there are many ways that we use the volume bar. So this is the end of this tutorial. If you have any question or suggestion, feel free to put in the comment section. And in due course, I will be recording another video to answer your specific question. If you find this video useful, let us know by giving us the thumbs up. If you think that this is another blah blah blah, alright, let us know by giving us the thumb down. If you think that this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. This will conclude our discussion today about a stochastic trader explains volume spike trading method. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.